You're about to see how the smart money operates in the cryptocurrency market and really across every market. And they don't want you to know about this. They don't want you to understand this. This is why they typically win and the everyday investor typically loses. So put away distractions and pay close attention to this. If you're going to be speculating on cryptocurrency or in any market, you want to make sure you understand this.
So to keep this simple, this chart shows how these market cycles work, how the bigger players, how the smart money operates in markets like this. And so first of all, we have the accumulation phase, and this is where the smart money is buying. This is where they're accumulating, in this case, say cryptocurrency. And during the accumulation phase, they don't want the general public, they don't want the everyday investor paying attention. Because think about it, if people are paying attention, if they're coming in, that's going to drive the price up, and they don't want that. They want to be buying at the lowest possible cost. So typically what they do is they manipulate the market. They hold the market down so that people don't pay attention, so that they can quietly accumulate at the lowest possible price. It makes sense, right? And then once they've accumulated enough, they begin what's known as the markup phase. This is where they begin to push the price up. This is where they want people to begin paying attention. And so the price begins moving up, people begin coming in. And during this markup phase, this is where the smart money is taking profits. Because remember, they bought in during the accumulation phase at the lowest possible cost. And then the markup phase is all about selling and collecting profits. Makes sense, right? And eventually the market reaches a peak. This is when most people end up getting into the market at the very top. Again, this is the very peak. This is known as the distribution phase. Smart money continues selling for the highest possible price. And at this peak, many people become fearful. They begin selling. Eventually, selling pressure overcomes buying pressure. The market starts coming down. This is known as the markdown phase. When the market reaches a certain point, smart money begins to rebuy into the market. Since most of the general public, your everyday investor, bought near the top, they end up taking a loss, selling on the way down. This is where the market sentiment amongst the people becomes very negative. They decide to stay away from the market, and this is where the savvy players, the smart money, begins to reaccumulate and prepare for the next markup phase. Again, this makes sense, right? And so these market cycles happen over and over again. Like I said, this is how the smart money operates across pretty much every market. And this is why most people end up getting wrecked. They end up losing money trying to speculate these markets. They're buying when smart money is selling. They're selling when smart money is buying. And again, this is why most people end up getting completely wrecked when trying to speculate on these markets. And so if you want to be effective, understand how these phases work. And like I said, you want to follow in the footsteps of the smart money.
You're about to see how the smart money operates in the cryptocurrency market and really across every market. And they don't want you to know about this. They don't want you to understand this. This is why they typically win and the everyday investor typically loses. So put away distractions and pay close attention to this. If you're going to be speculating on cryptocurrency or in any market, you want to make sure you understand this.